Johnson & Johnson topped the street's expectations in its latest quarter thanks to strong cancer drug sales during the 3-month period. The company boosted its full-year sales outlook, but tempered expectations for its adjusted operational profit, citing the impact of a recent acquisition and, of course, tariffs. President Trump has warned that levies will be placed on the sector very soon. Joining us now to discuss, Asad Haider, Goldman Sachs Global Investment Research Head of the Healthcare Business Unit. Asad, great to speak with you. Let's start on Johnson & Johnson maintaining the EPS outlook. How were they able to do that in your view, and what are your other big takeaways?
Yeah, thanks for having me. So there were some questions. I mean, overall, we thought that the quarter was actually very encouraging and very much in line with the thesis that we have on Johnson & Johnson. And just to zoom out for a second, we upgraded the stock to buy last week based on our view that the innovative medicine business is going to continue to surprise on the upside and show encouraging trends. And that's really what you saw. Now, there was some gross margin related pressure, which they cited, they attributed to Part D dynamics. This is the first quarter that the pharma industry is going to see some headwinds from the Inflation Reduction Act, particularly related to Part D. And there were also some tariff related costs that they talked about $400 million that they attributed to the medtech business. But beneath the hood, the pharma business did really well, and their operating margins actually beat because they flexed the P&L via cutting costs and cutting R&D. And to us, that was actually a very encouraging sign. And I think the combination of those things, along with a little bit of an FX tailwind, had them maintain the earnings for the year.
And how are you thinking about the impact of tariffs both on Johnson & Johnson and then just moving forward, because they are the first pharma name to report? What does what did their results tell you about how the rest of the industry might be impacted by tariffs as well?
Well, the short answer is not much. And I think it's still all very uncertain. I think we all have been waiting to see what the announcement for tariffs is. I think what's known, of course, is that the pharmaceutical industry is going to be tariffed the way semiconductors and autos and several other industries are. We've been waiting for this for a while. What we also know is that there has already been a Section 232 investigation that has begun. And depending on how that goes, what we're all going to be waiting for is to see what level of tariffs are going to be applied to the industry. And at this point, I just don't think we have a lot of clarity on any of that. And so what that's been doing is creating a lot of uncertainty across the entire pharmaceutical sector. It's making people question the traditional orthodoxy around the margin structure and the profitability of this sector. But we just don't know a lot right now. And I think it would be too early for me to speculate on where this all lands. But this is a cloud that the sector, that it's an overhang on the sector. And until we get a real off-ramp, it's going to be hard to see how that, how that overhang goes away.
And Asad, my guest host, John Hilsenrath, is still with me. John, you got a question for Asad?
Asad, you talk about J&J flexing their earnings muscle by cutting cost and cutting R&D. I'm listening to hear how all of this affects the economy, and that sounds like bad news to me.
Well, I don't think it's bad news necessarily. I mean, I think we don't really know line items on what exactly they did on the SG&A and the R&D side. I think it just speaks a little bit to the leverage that they have across the P&L to make these types of investments. I think what's more interesting is just the way that Johnson & Johnson has been responding, as I expect others to these tariff threats, which is building infrastructure, manufacturing facilities in the U.S. I think everyone saw that about 3 weeks ago, they announced a $55 billion manufacturing commitment to the U.S. That is higher. That's about 25% higher than what they had initially said they'd do. They opened a new facility in North Carolina, which they are going to use to manufacture in the U.S. And there's 3 other facilities that they're going to bring on the manufacturing side that are yet to come. So I think those types of measures are probably more important for as far as the overall economy goes than these pharma companies really flexing the P&L in there with things like SG&A and R&D.
Yeah, Asad, I'm also curious how you're thinking about the impact of China and any China demand on this. John, I wonder if you have a question to that end as well.
Well, I mean, I'm interested in China, and I'm also interested in the risk that they cut off supply chains and that affects the supply chain of the pharma industry.
I mean, John, I just don't think we know. I just think it's just too early to speculate how this all plays out. Like I said, we are right now navigating a period in the pharmaceutical sector where there are just a lot more questions than there are answers. I think it would be too premature for me to speculate on where what gets tariffed, what happens with China, what happens with demand. But our focus is just on fundamentals, and our call on J&J really has to do with the fact that their pharma business and some of the new product cycles within their pharma business are actually underappreciated based on some of the diligence that we've done. And once this blows through, I mean, that's really where we'd be guiding investors.